Jamie, Steve, happy Monday.
Thank you very much, Scott. Steve, what's happening over there?
Happy, test drive Monday. Actually, when we do these, it kind of reminds me of a Black Friday digital DoorDash. So yeah, it's been a fun morning.
Yeah, I can see
Big
the resemblance
success.
there.
A lot of people pounding on the door this morning, and we're doing some good numbers. So good to see.
Yep, and it's good to see over half the attendees in the webinar are taking the test drive. That's very good. We're going to save the latter part of the webinar for a little Q&A for the new people to get their questions answered as well. So, wow, November 11th, October's been in the books for a while now, and winter is upon us. So welcome everyone to this edition of Office Hours. As Scott said, I'm your host, Jamie Hodge, and Steve Gomez is riding shotgun with me. So before we get to the good stuff here, just a quick opportunity to make sure everybody is aware of the fact that all of the information that we share with you in this webinar or any of the 9 webinars that we're coming at you with every week. We share all this information with you for educational purposes only, so don't misconstrue what we share with you as a solicitation to buy or sell securities or anything for that matter. If you do need investment advice, if you need somebody to tell you what to buy, when to buy it, all that good stuff, just do yourself a favor, seek out a registered investment advisor or somebody like a licensed Series 7 stockbroker that can legally help you out with that type of information. We're just a bunch of traders that have been using the software for a very long time, trying to show you some cool stuff and some good things to trade throughout the day. Of course, it is earnings season, so we've got a little bit more going on. But moving right along here, since we do have a good number of people in here that might be seeing the software for the first time, taking part of the test drive, I want to take a little bit of time at the top of the hour here to let you know not only do we have the award-winning technology, which is TI Pro, artificial intelligence, all that good stuff, but we've built quite the community around the technology, which is very important. Support, 5-star support, all kind of starts up here with the Traders Room, which is hosted by Barry Anderson. Nice crowd in there thus far for the test drive. Had a few glitches in there this morning, but I think they got it all worked out. The bottom line is this: there are traders from all walks of life in there, all the way from the newbie to seasoned traders and everything in between. So it's a great place to get good feedback, see what other people are doing. More importantly, Barry does an excellent job at showcasing his trading style and the way he uses the TI technology to find his trades. Also does a very good job at moderating a trading room with sometimes 400, 500, 600 people in there. If you've shopped around online for trading rooms, you know that any of them worth their salt are not cheap. So one of the added benefits of our trading room is $0 to participate. Matter of fact, you don't even have to be a subscriber to get in there and see what it's all about. So definitely take advantage of that resource if you have not been doing so thus far. Moving right along here, of course, today is Monday with Office Hours and myself and Steve. Steve's going to get the steering wheel tomorrow for the Trade of the Week webinar. Andy Linloff's going to ride shotgun with him. Wednesday is always entertaining with our CEO and founder, Dan Merkin, and our Chief Technical Officer, Brad Williams, always coming at you with some of the new developments that are coming down the pipeline. So always entertaining with those guys. Pop in on them on a Wednesday sometime. Andy's going to round out the 5 p.m. Eastern webinars with the Trading Studio. I'm going to ride shotgun with Andy's on Thursday, and then Friday support session, something a little bit different. We kick it off every Friday at 11 a.m. Eastern, allocate 3 hours for it, and depending on the crowd, the size of the crowd, how rowdy the crowd is, we'll go 2 or 3 hours. And the cool thing about the Friday support webinar, nothing is off limits. Could be something very simple, basic configuration type things, or you could pop in there and ask us advanced back testing, strategy fabrication test, all that good stuff. So it's a free-for-all Friday every day, or every Friday from 11 a.m. to 2 p.m. Eastern. So take advantage if you need some help or real-time strategy help. In addition to the 5 p.m. Eastern webinars that we host Monday through Thursday, we also host 4 TI University segments as well. These all will kick off at 12 p.m. Eastern, Monday 101, Tuesday 201, Wednesday 301, and Thursday 401. Now, we do recommend that you take these in order because what you what you glean in 101, you'll need to build upon in 201, so forth and so on. So these are live every Monday through Thursday, 12 p.m. Eastern. We do recommend, if you can, if you don't have any schedule conflicts, best way to do these is live, because if you do have questions, you can get them answered in real time by the trainer that is in there. If you do have something pesky like a job that gets in the way, fear not, because we do have all of these pre-recorded on our YouTube channel since the content remains static. If you can't attend the live version, next best thing is to attend the pre-recorded versions on our YouTube channel. And once you do that, if you have any questions, the best way to get those answered is the email address info@trade-ideas.com. We'll get it routed over to the proper person and back to you as soon as we can. So all in all, 9 different webinars coming at you each and every week, the 5 p.m. Easterns, Friday support session, and our TI University series. Always like to give a little peek to the attendees of the webinar of how our user base has expanded since we first introduced our very first AI module, Holly 1.0, came online at the very beginning of 2016. Of course, since that point in time, we've added 2 additional AI segments, Holly 2.0 and Neo. So picture speaks 1,000 words. Obviously, people are liking it. It's resonating because our user count has steadily gone up 2017, 18, and it'll be interesting to see where 2019 finishes as well. So in addition to the AI, we also launched our Brokerage Plus product, which allows you to use our interface to trade currently if you're an Interactive Brokers. We do have plans to expand Brokerage Plus to some other broker dealers, trying to figure out who's going to be the best fit for us moving forward, because as you all know, lots changed in the broker dealer space in the past 6 weeks. Predominantly, everybody's went to 0 commission. So that's quite a paradigm shift in the old trading world, because you might be sitting there asking yourself, well, why is it only available with Interactive Brokers currently? And the reason we went with IB in the first place, not only are they the largest retail broker dealer out there servicing US clients and foreign clients as well, but they had the most competitive commission structure. So now that everybody's racing to 0 on commission fees, well, it makes sense to expand to some other companies as well. As we get the details, we'll pass those along to you guys as far as who the new broker dealers will be as we make those decisions. But needless to say, it's a good development for everybody because, hey, one of the biggest challenges in trading is overcome commission costs, and that just went away. All right.
Big.
It is going to be big. It's everybody's
Especially
just kind of
auto
scrambling.
trading. Yep.
Yeah. And I'll get into some little tidbits about how, how I'm perceiving it's going to help us with auto trading as well. Steve, it's that time. If you want to take the reins here and talk a little bit about the market action today, which was, kind of a little lackluster today, but hey, it is a Monday. We got 4 more days to see what happens, and earnings are still kicking.
Sure.
So if you're ready, Steve, I'll
send
kick
it
it on over to
I
you.
got a few things. Actually going to take a moment too, since this is the test drive week. I answered Pablo. He had a good question. I answered it for the whole group, but sometimes visuals do better. His questions was 2 of them. What is relative volume and position and range? I'll start with relative volume. It's one of our strongest filters. The relative volume shows us a very interesting data point. And right here on our single stock window, I'm going to highlight 0.69 for the spiders today. 1.0 is normal volume. So we can go down here to this normal volume line and kind of track that normal volume. Well, these were the days where the relative volume was above 1.0 for SPY. And we can kind of see down here today, we were really far below. So the weekdays will show up in an individual name and relative. And what that means is we're going back about 3 weeks on our database for that individual name only, and looking at the clock and saying, all right, it's 9:50 Pacific time or what have you. What is the relative volume? What is the current volume for stock XYZ? And if it's normally 500,000 shares by 9:50 Pacific, that'd be 1.0. If it was 1 million shares by 9:50 at that same time of day, that'd be a 2.0 relative volume. So it's nice because it's always looking back on the day, and I like to say it's kind of like it's tracking the pace of volume or the run rate of volume, if you will. So that's relative volume, and it will always show up on our single stock window no matter what you type in. Second good question was, what is our position and range? We have numerous filters called position and range. Just using today, position and range by itself, 0 equals low, today's low, and 100 equals today's high. So you can use that to kind of back into things that you want to see. And you can use it for a bigger picture too, which is a very strong filter. For instance, we have one called a position and 20-day range. I'm going to call this a 20-day range right there. So there's our 0, the low, and here is our 100 back 3 days ago at the high. So we can say we only want to see stocks at the 95th percentile of our 20-day range. We can do it like so. We could go back and do the same thing for a 3-month range. 100 would be our high for the 3-month range, and this would probably be our low down here, 0. So we can say I only want to see stocks that are in the upper 75th percentile. So it's a good question, and that's the way you can use those two filters. All right, so on to the remarks here. First things foremost, I zoomed back here a minute ago while Jamie was talking, and I'm looking at this flat 200-day moving average. We've been looking at a flat 200-day moving average for a pretty long time, about a year, maybe longer. All of a sudden, now we've got this big old tanker, you want to call it, like an oil tanker, starting to show some serious long-term, big-time momentum. That's very solid right there. That's a big underpinning, technically, in the big picture. But let's forget about the big picture for a moment. Let's zoom into really more what's the shorter term time frame. And again, there's really no bear case to be made here. All of the key moving averages are above each other. Here's our breakout pivot line, which we respected back here with 3 nice days of consolidation and moving higher. So now it's really coming down to what's going to happen when our friend, the 10-period moving average, touches the price. In a perfect world, we might come down and touch that price and then move higher from there. We've been doing that for a while, and all things can come to an end. So the trend would suggest that we're still going to respect, I think it's the proper word, we're still going to respect this line right here, the 10-period SMA, as it shows up. So if we post a close below that 10 period and start to get sloppy again, well, then we may be in for another retest, and there's nothing really wrong with that, of that major breakout pivot. And even if it was to come to that at some point, we still have higher lows, building higher base camp. So, in the short term, we got a little extended, especially back here. And I said it's kind of hard to get the price action with a lot of visual space between the current price and the 10-period moving average. It's usually going to want to return to the mean, the reversion to the mean move. But the momentum is intact as long as the 10-period line is supporting the price as it moves higher. That's the story in the S&P, the NASDAQ. It's pretty much the same story. And it's actually very bullish. It's setting up very bullish. There's 2 different ways you can consolidate. You can consolidate backwards in price and build a higher base, or you can consolidate sideways. And that is the more aggressive of the 2, meaning there's more pent-up demand possibly that could come out of this move. So a really nice sideways move in the NASDAQ and the Qs. A little bit of a specific watch for tomorrow. Watch for a possible, jam down on the opening. And if it touches that moving average, all signs could point to the market making algorithm saying, hey, it's been 15 days here since we've made a touch on that line. Let's kick in the buy engine again. And the quant funds and the money managers might start to do that again. So keep an eye. If the price action touches the 10-period daily simple moving average during the trading day, in my opinion, that's kind of what the quants and the market equals, whatever. They type that stuff. The other thing we've been watching is the IWM, the Russell 2000. It's been my contention, and I don't know if you did it, Jamie, but I did it. Okay, to extremely aggressive in mid and small caps for now, because if they break out of this range, I think we're going to have a lot of push behind it as the money managers try and catch up and also get this moving, or get this index up to where the other respective moving averages are at all-time highs. So there's a lot of alpha that could be generated in here. So what I had said last week was watch for that, of course. But in a perfect world, we spent too much energy down here going from A to B, and we need to pull back and give the troops a warm shower and some food and a little bit of the rest, and then we have a possibility of moving higher. So hopefully in the next day or two, look at that. Matter of fact, we touched that 10-period moving average today. I think in the next day or two, we might see some powerful movement in the Russell 2000. Now, if that does happen, for some of the newer users, let me clue you in on something. If you're watching all 3 segments of the AI, which I'm not, there are a couple of strategies called Mighty Mouse is one of them, and I think Little Big Guy is another. So Mighty Mouse and Little Big Guy are going to only focus on stocks under $5 or $10. And coming off my discussion of the IWM, if we have a big move in the backdrop of the Russell 2000 that could last for days, pay attention to what Holly says about Mighty Mouse strategy. Look at that, 100% today, interesting. And what Holly might say about little big guy strategy, because those are only focused on the small cap stocks. So we can try and maybe put 2 and 2 together using our AI here. If the IWM is blowing past the other indexes, turn on the Holly and pay close attention to some of those trades. There might be some really good entry points and some value going on there. And that's actually, I got one more thing. Tomorrow I'm going to tease it a lot more. I'll tease it now, but I'm going to talk about the 10-period moving average. I was having a discussion with Barry over the weekend. Barry uses the 13 EMA, and he says, well, Steve, why do you not use the 10? Why do you not use the 13 EMA? I said, well, I didn't know how to answer it other than give him a visual. So I pulled up 2 charts fresh in my head, and I superimpose them both. The blue line is the 13 EMA, and the darker green line is my 10 period. And as you can see, we get some test, hold, test, hold, test, hold. It never touched the 13 EMA, so it makes me ask, why are you using the 13 EMA? And he said he's going to start really paying attention. Here's one more example real quick. Brian Shannon liked this swing trade stock earlier. It's called CRISPR. And once again, I've overlaid that 13 period down here, just doing nothing. But the 10 period is showing up here on a daily basis. Matter of fact, before I give it back to you, Jane, let's see what CRISPR did today, because that doesn't include that chart. CRSP. Respected the 10 period again today. So I don't know why people would be using a 13 EMA after I show that visual, and I'll definitely talk more about that tomorrow in my content for tomorrow, and that's all I got.
Yeah, we're all big fans of the 10 period, and we've been waiting on that filter for a very long time, and I think, what, five days of data is what we got in there thus far, Steve?
I think on the 10 there's 10 days of data in that one, I think.
Okay, it didn't seem like it's been that long, but yeah, 2 weeks. Okay, yeah. Perfect.
You can probably, I'll figure it out.
Yeah, all right. Well, thank you very much, Steve. Good analysis as always. And you should have eyes back on my screen now.
Yep.
So, moving right along here. Okay, as Steve was pointing out, kind of a lackluster day. Gap down, tried to get some of it back, got a little bit of it back. But as Steve was pointing out, look how kind of paltry the relative volume numbers were on all the big tracking indexes. Having said that, of course, it's always important to know how much room we have. And the reason I say that is because on my CC windows this morning, or the one that I looked to 15 minutes into the open to try to give me a little idea of what might happen the rest of the day, I look at this one. And this one is looking at stocks hitting highs and lows during the first 15 minutes with some turbocharged 1-minute volume. But these stocks have to be capitalized at 4 billion or higher. So I'm only kind of concerned at what the big boys are doing in that opening 15 minutes. And without going into too much detail for the new people here, what we're trying to do here is kind of get a little bit of a read on what the institutions might be up to, because the majority of the volume that you see out there is institutional volume. That is really what drives the markets on any given day. So sometimes, but not all the times, we can look at this window and see what the bias is after the first 15 minutes, and that gives us a little idea of what to expect for the rest of the day. But of course, just like any metric or study that might be our favorite, it's not 100%. Nothing is. And if you do find something that works 100% of the time, please give it to me. So I'll be eagerly awaiting that. But in this case, kind of had a false reading this morning. The reason I say that is because we were showing 61% bearish count after the first 15 minutes. But when we look over here, and it was right when this day was starting here, not a lot of room. As Steve was pointing out earlier, looks like we're starting to set up a little consolidation period up here, which is not bad. Gotta build some steam here before we can go attempt to attack those highs again. But just kind of eyeballing this level right here, if we were really going to push through that level and get down to these guys again, we would have really had to have had some volume. All right, and you can see here we had a little vacillation on the opening 15 minutes, and then from that point on, it was just kind of a slow grind higher. All right, not a lot of follow through, not a lot of raging longs or raging shorts to be had. It seemed like there's a little bit of everything today. However, having said that, I'm going to circle back around to this reading later on in the presentation, because I am starting to notice some additional correlations. Backtracking to what Steve said earlier, the zero commission game, and how our technology is, kind of really been unleashed, the potential of our technology with zero commissions, because we can generate some pretty good looking statistical data sets, but there's a lot of trades in these data sets. So prior to zero commissions coming into reality, a lot of these models that we could develop and look at, they looked good, but it's like the old parable. You're dying of thirst, you're standing in a room full of water, but every time you bend down to get some of that water, it disappears, right? Well, think of it this way. With the advent of zero commissions, a lot of these strategies that we couldn't run before because they looked real good, but commissions were just too steep to overcome, the potential of those strategies very well could be unlocked now. So I'm going to circle back around to this reading and show you some of the correlations that I'm noticing by taking these readings, taking the market action, and then making the decision on how to treat a certain statistical data set. So we're going to circle back around to that towards the end of the program here. But bearish count kind of negated by just not enough room in the market today. And let's see here. So let's go ahead and talk about Holly. Holly recap as follows. Not a huge or not a tremendously busy day for Holly today. If we look over here at the channel bar, nothing to write home about. Pretty much a flat day. These two cancel each other out with what, few pennies left over, and this guy's up $4 and change. Keep in mind, these are all based on the AI trading 100 shares of each trade. So we're pretty much flat today on 19 trades. Nothing to write home about, nothing to get too excited or worked up about, considering the show that the Holly Trio put on last week, which we will be taking a look at here in just a second here. And we're going to talk about navigating earnings with the AI. In this particular case, NEO. NEO has been retooled recently, did quite well last week. We're going to take a look at some of those performance statistics. But how does this tie into earnings? You might be sitting there asking yourself this, okay? So from a trader's perspective, there are many traders out there that generate the majority of their trading income during earnings season. Not all, but a good portion, because hey, that's when things are moving around, earnings are being reported, lots of volume, lots of movement. I mean, earnings season is what it's all about here. So the thing is, with earnings in the past, what are you going to trade? There's going to be more conducive, or how are you going to know which setups are going to present you with the most upside or downside opportunity, depending on if it's long or short. So before we get into taking a look at these trades here, just to point out, if you've been a client for a while and you've attended a bunch of webinars, or even if you're new to the game, earlier by Steve, relative volume on the indices thus far for the day or for the sessions. 1 is normal. If you see a relative volume rating of 2, that means the stock is on pace to finish 2 times normal volume, 3, 4, they can get a lot higher. So the retooling of the AI is a constant thing, or the 3 AI modules. Now, one of our in-house resident gurus, Michael Noss, has really been putting a lot of time into NEO as of late, and really focusing on the relative volume metric. A guarantee is right, because the more volume coursing through that thing, you can spin it a bunch of different ways, okay? And when volumes are low, that's typically when these algos are quote unquote making the market, if you want to call it that these days in the stocks. So it's a lot harder fighting an algorithm versus, going with some real order flow, okay? So let's talk about NEO here and some of the stats that it spit out last week, because all in all, on all the trade counts on a percentage basis, and this is going to be in moderate risk parameters here. And before I proceed here, for those of you who have been around for a while, we used to use 3 different risk categories: risk off, risk on, and then full risk. We've recently changed the names of those. Okay, so now we have conservative risk taking the place of risk off. We've got moderate risk taking the place of risk on, and aggressive profit percentage or dollar amount replacing full risk. Okay, rules are the same. We just change the names to make them, attempt to be a little bit more understandable. All right, so what we're gonna do here is we're gonna go back to last week. So last week encompasses the 4th through the 8th, all right in the peak of earnings season. So what we're gonna do here is we're gonna go to the trade blotter. We're gonna only point it to NEO. Of course, this is today's activity. Once again, nothing to write home about. But what we're gonna do now is we're gonna go to history, time frame. And I've already got the date styled in here. Please show me the 8th through the 4th, all NEO trades. And here we have it, okay? So this is the entire blotter, only for NEO, all last week. Winners up at the top. If I'm sorting by moderate profit here. These values that you see here are based around my settings in the AI under options. We're using risk-based stop losses of $100. In other words, give me as many shares as I can, but if I get stopped out, I only want to lose $100, okay? Now, side note, right now, all of these guys are showing us results assuming we trade 100 shares per pop. Now, it's been a good thing for a while now, but risk-based stop seems to be a more realistic approach to this. Because, hey, are you going to trade 100 shares of a $50 stock, 100 shares of a $5 stock? That's quite a different variation in capital at play there. Of course, we can use dollars at play, but from what me and the boys have seen, over and over again, risk-based seems to be the thing of choice. Makes the most sense. So just keep that in mind. All of these values here that you see are based on risking $100. And then you can see the appropriate share amounts that it gets you into if you only want to risk $100. Of course, these are the winners up here. We scroll in here, just like any blotter, we're going to see our losers. And you can see the ones with the stop outs, just a little over $100, right about there. All right, so more importantly, before we get in here and take a look at some of these individual names, I've got these sorted by moderate profit win value, or we could go to percentage value. Some pretty big percentage winners here. So if we tally up this entire moderate profit percent column, all the way from the top here, the big almost 20% winner, all the way down here, we're going to be left over with NEO kicking out about 42% last week. Okay, pretty impressive. Now, since NEO is focusing on relative volume, one thing, the common thread here is that when all of these stocks were triggered, we had massive relative volume numbers. And, we're seeing relative volume here on the single stock window of what it did today. Can't really zoom back and show you what relative volume was right here. It'd be take too much time. But I can tell you, since we've been trading all these, a lot of these guys are in the 20s, 30s. I mean, I think the smallest one I saw all last week, relative volume-wise, was like a 3, all right, which is typically really good, but due to earnings season being in play, they've been just off the charts here and producing some pretty dang good results. What's interesting about this is if, for example, biggest percentage winner, PRTY, it's got the 15-minute chart here, so all I have to do is scroll back. You can see a lot of these plays pretty tame, okay? Once we get 30, 45 minutes behind us here, Holly issues that short signal, just a nice, easy grind down all the way to the close here, kicking out 19%. Now, the cool thing with our new single stock window, we can immediately see when earnings are, right? So this was earnings, that was an earnings play. The good news is it was a pre-market play. So the cat was already out of the bag. We got the big gap down, and this was just your classic bad earnings. Market didn't like it, down move, and then a slow grind down, and even heading, trying to establish a base here. Once it tightens up, will it rebound or will it pop back down into the abyss? We'll see. But the bottom line is this: NEO's done a very good job at finding us extremely high volume plays that tend to work more times than they don't work. And we can always catch a glimpse of the earnings. Are they still pretty far out? this morning. It's very important. You know, we ran a couple of earnings plays that we're reporting at the close. So more than likely, when you're in those types of things, unless you want to really roll the dice and take a gamble, that's going to be a pretty good heads up to say, you know what, unless I want to take excessive risk on that earnings play, I better just close the position out before the market closes. So as you can see here, most of these earnings we're reporting last week. As we scroll through these, 4th, you know, 8th, 6th. Now some of them are going to be further out, but it's just a really good, concise report of, okay, this thing has earnings, it's doing massive volume, the chart looks good, and more importantly, ladies and gentlemen, statistical probability can now be applied to these earnings plays because that's what all of these signals are based around. So once again, earnings season, yeah, we all know that we can make a pile in earnings season. Of course, on the other side of that coin, if you are picking the bad trades with the high volume, it's going to be, you know, kind of double bad because they move a lot faster. So think about it from this perspective. Yeah, we had quite a few trades here to deal with over the last week, but they were all pretty much earnings plays. Either earnings were just about to occur, had already occurred. So what we're getting is we're not having to take the excessive risk of holding earnings overnight. Cat's already out of the bag, volume's in play, and the direction looks apparent on the charts. But we also have the added benefit of statistically weighted earnings plays with massive volume. All right. So needless to say, as earnings start to come to a close here, there won't be near as many high volume stocks coming through, but we always know there are always some specific instances out there. So we will expect to see NEO's activity drop off, but then again, it'll kind of change its role. Okay, earnings are over, but we're still going to be showing you the ones that are doing the massive volume on the relative scale, and they're just going to be probably fewer of them. So it's going to be interesting to see, you know, how the frequency of this new NEO is adjusted once earnings are over. But so far, in an earnings play or earnings season, you know, kicking out some massive returns from good old NEO here. All right, see a question popping through. Looks like Steve got to it. Just want to do a little time check here because I do want to save a little bit of time for Q&A towards the end of the presentation here. So that's a little blurb on, you know, using the AI to navigate earnings season, because think about how many thousands of companies out there are going to be reporting. But even though we have a large blotter full of trades here for last week, that's still just a smidgen of earnings, but it's bringing you the ones that have the most statistical viability of doing the thing that you think they're going to do. So the same old game with Holly, but performing really well in earnings season. So good job. We'll see a little bit of a slow start this week, but 42% is going to be a hard metric to beat, but we got 4 more trading days left in the week, so we will see what happens. Now, using exit signals as entry signals, that's something that we talked about last office hours, but it's still a very viable thing. So let's just take a look. We had a small trade count today, but even so, we did have one very nice example of using an exit signal as an entry signal in the, let's see, I have to go to the entire blotter here, resort, and it was in this guy right here, JNCE. So here we have JNC on the 15-minute time frame right here. Get a buy signal from Holly right there at 449. For a minute, I thought that was a Mighty Mouse since it's a low dollar stock, but just keep in mind, Mighty Mouse will produce some low dollar plays, but that doesn't mean that some lower dollars might not come through other strategies. For example, strong stock pulling back. Got the pullback here, had a nice little 45-minute run, little 30-minute pullback here, and Holly calls the buy at 449. 1, 2, 3, 45 minutes later, the timed hold expires. And that was a pretty short one there. So if we take a look at strong stock pulling back, we can see here that one's geared around one of the shorter hold times here, 45 minutes. Of course, I just clicked off of it. So basically Holly did what she was programmed to do. We always kind of chuckle here and go, you know what? It's not Holly's strong suit. Exits are not Holly's strong suit. Her strong suit, her Superman power, her superpower is bringing us statistically weighted entries. So this one was good. Holly just closed it out because she's programmed to do that for 45 minutes and banked 32 bucks, assuming risk of 100 bucks. Not bad, but look what would have happened had we stayed in the trade. And this is pretty much, you know, never really like to use the term no-brainer, but what do we have here? We just had a little consolidation period right above the entry signal, not even dipping down back to that entry signal. Check out the 10 period, riding it nice and good. All right. So all we really had to do is make the call here. All right. Give it a little bit more time, and this would have happened. You know, we would have ended up with 84 cents going into the close, and that's 470. So maybe 20 more cents at the high here was what the potential was. But needless to say, if you were in it from Holly and made the decision to go risk on, or I should say moderate risk, ignore Holly's exit signal and stay in, you would have been rewarded. You would have also been rewarded if you saw Holly closing something out and took the time to go look at it, okay? And I've said this ad nauseum in office hours and some of the other webinars. Get into the habit of looking at positions that Holly is closing out in timed exit, reduce risk, and profit save, because sometimes that's going to be a great setup. And JNC is no exception here. Even if you weren't in it here, you see her closing it out here, man, that looks like a really good entry, all right? Still staying way above the entry line, way above the 10 period. This comes into play as well. Well below that new high right there. Look what happens in the next 30 minutes. Not only do we start to grind up, we break that opening range break and get pretty much the biggest move of the day here. So once again, even if you weren't in it with Holly right here, her exit would have been a great entry on the JNCE right here. And just kind of taking a quick perusal here, we did have a little bit of meat left on the bone on the Sony trade here. That one got off to a good start, kind of peeled back here, got a little sloppy with the 10 period, but perked its head back up towards the close here. So about double is what you could have made there, just holding the position into the close. Even though nobody likes to sit pullbacks, the good news on this one is, had you made the decision to stay in this trade, a break-even stop would have kept you in it all day, and then you would have got that nice little pop towards the close there. So this one, you know, even the exit signal would have been a little bit worse of a price than Holly, but still a little bit higher at the close. This one a little bit more, yeah, CVLT. Don't know why my should have a 0 in there, one would think. I don't know why I've got a blank in there. What about a short here? Okay, here's a pretty decent one right here. Not a double bottom producing this one, ATVI. Pretty decent exit signal, or excuse me, entry signal right here. 10 period, well below. Nice move down here. Holly pulls the plug a little early here. Once again, not a double bottom. Yeah, even a shorter hold time, only 30 minutes right there. So Holly pulls the plug on it right here, and you know, wouldn't have been a bad entry signal right here at 53.01, seeing it bottom out at 52.24. So a good 75-cent run from the time that Holly pulled the plug on it down here to bottoms before it finally kicked back up and got a little traction above that 10 period SMA. So whether we were in it with Holly here, enjoying this nice run, and then taking a little bit more risk as she closes out and we decide to stay in it, or whether you just saw Holly closing it out and went, that looks pretty good. It just broke about 15, 30 minutes ago. Might have a little bit more room on it if we consulted the daily, just popping right down to these levels here. But whether it was the original signal or the exit signal, both would have yielded some pretty nice profits there. All right, see a question coming in. Which archived webinar describe how to set up a symbol list before scanning for candlestick signals? Well, Valen, I would assume you mean the daily candlestick pre-configured list that we maintain. If that's the case, I'll get to that here at the towards the end here. All right. So using paper trading to try to feel out the market. All right. So now is the time where we're going to circle back around to these readings here. So even though the overall market didn't really have any room to the downside here unless we had some volume, which we did not. So what do we have? We just had a gap down and then a grind higher for the rest of the day. But those of you who are in the chair probably noticed, as well as myself and all the boys here, if you were long and you didn't take the money, you didn't get a whole lot of follow through today. Sony is the perfect example. I mean, it started off really well, moving higher, really close to all-time high territory, but just didn't have enough oomph in it. You know, what do we have on, and that was even with relative volume of 2 here. All right, so these readings here, SPY trying to make up some of the gap. This is a bad tick. So we did get pretty close, but it was, you know, a little peel off towards the close there. So what I've started noticing and what I've started engaging in is picking a strategy. And of course, this is just the one that I've picked, but based on how you feel about the market, the way your brain works, you may pick something completely different. But this is the one that I've found the most interesting. You might notice the title here, 250 short. That is based on the premise that we're going to be looking at stocks hitting 250-day high. That's not just a random number that I arrived at. Did a lot of back testing, started way down low, and just kept raising that number of days. And every time I did, I kept getting better results. When I got to 260 and 270, I started seeing my back test results get worse. So that's how I arrived at a 250-day high. We've got some very basic filters in here. Average daily volume, 1 million shares, because I don't want to have to worry about large spreads and stocks not being tradable. Okay, and keep in mind this was designed for, you know, a rapid fire type of, or, you know, taking many entries from a specific strategy, whether they be manual entries or automated, that's up to the individual. So a pretty bare bones filter set here with a simple 250-day high alert. Now the kicker here is that sometimes the strategy works really well shorting these plays. Sometimes if you go opposite, you do better. The question or the kicker is, how do you know which way to go? Okay, should I long these things today? Should I fade them? How would I have any idea whether to go long or short in this type of strategy? And I've been, you know, logging and noticing correlations based around the compare count windows, and then a little bit of market action. So what I've been engaging in is around 11 o'clock my time, which is about 2.5 hours into the market since I'm in Central Time. Market opens at 8:30, and every day at 11 o'clock, based on what I think the market might be doing. In other words, if I see really weak compare counts, the market may jive with those compare counts and it might not. But regardless, I'm going to launch this strategy in demo mode and paper mode, and I'm going to see which way the wind is blowing. Now, this morning, based on that 60% red compare count and then the lackluster action that we saw in the market for the first 2.5 hours and the less than 1 on relative volume for the major tracking indices, I decided to run it the short way. And I'll let it pile into anywhere between 20, I think I've capped it at 30 positions. So this is what the blotter looked like today at the close. If I can drag the window over here. Come on, there we go. Okay, so as you can see, it only produced 23 trades today, looking right here. Now, I did permission it to take 30, but after 11 o'clock my time, only 23 trades hit that ticker. Okay, and so I was betting that, you know what, if these things are hitting 250-day highs today, I think the majority of them are going to back off versus continue to trend higher. And this is you know, this is what the results yielded today. So on 23 trades at the close, up about 250 bucks, and you can see a pretty, you know, not a bad blotter here. You know, got their winners and losers just like you're always going to have, but you know, after this tally column is tallied up, we're 250 bucks in the money. So see, being able to ferret out information like this moving forward, just think about the possibilities when we do get ported to a $0 broker dealer, okay? And I believe I was allocating $5,000 per position, could have been 2 or 5, I can't remember off the top of my head. But the bottom line is this: you don't have to take excessive risk when you're in a $0 environment. So pare it down to a much lower dollar amount. Heck, if you just want to get an idea of which way the wind is blowing, you could even theoretically go, you know what, let's take 1 share of every position, let it open up, see if you get in the money. That's a real-time test, because we have to keep this in mind. Demo's demo, right? It always will be, all right? Sometimes the results that you get in a real market environment are gonna be very close, other times they're not. That's why with a strategy like this, I'm saying 1 million shares a day, you know, because I want small spreads. Typically those stocks are gonna have 2, 3, maybe 5 cents on the high side. But before this paradigm shift of 0 commissions rolled around, we had to beat commission and slippage. Now we just have to beat slippage. So if you're in a playground where slippage is going to be small, we don't have to pay commission. I mean, you could literally cycle into one basket. Oh, look, I'm up 250 bucks. Close them all out. Okay, let's take 20 more events. Okay, I only got up 10 bucks. Close it out. Okay, and of course you're going to have your losing baskets as well. But if you're able to peg can't say the direction here, but the little nuances of what certain strategies are doing on certain days, you know, and this one's from a relative standpoint pretty simple. We got weak opening, we've got a gap down, we got the market struggling to get a little bit of that back, but once we were here, you know, it's given a little bit back, it's struggling, then it's given some back, okay? Thousands of stocks out there, ladies and gentlemen, even stocks that trade 1 million a day. So just keep that in mind. I'm just trying to prep you guys, get some mental exercises going, because the beauty about being able to paper trade, not only in the manual sense, but being able to put data sets like this in motion and seeing in real time how they're performing in certain market conditions, and does it make sense to run them in the direction that you originally designed them for? Or after 20, 30 launches of something like this, you're going to know, okay, when the market's doing this, this, and this, and my compare counts are doing this, and the gap is this, it makes more sense more times than not than to run this strategy in this capacity, or fade it, or run it in the direction in which it was designed. But the bottom line is that 0 commission barrier, the barrier of commissions coming down, is going to be very, very beneficial in unleashing a lot of data sets like this. But in the meantime, until we get ported to a $0 broker dealer, start doing this in demo mode. That way you'll already know what to expect. When the 0 commissions roll around, you'll be ready to just jump right in there and start taking advantage of it, because you've been running your sets, you've been running your strategies, you know what to expect from them in each and every market condition. And before long, it'll just be like second nature. The market's doing this, this, and this. Well, it's time to launch strategy X, Y, and Z in the direction that they were intended, or fade them, or this one, or not that one. So hopefully this makes sense. If I need to expound on anything, by all means, throw the question out there. Stan's asking, can I get a copy of the compare count window that was up at the beginning? Absolutely. I'm gonna copy the cloud link here. I'm going to post that into the chat area. Okay, so this is the large cap CC window, has now been dropped into the chat window. So just click on that cloud link, copy it, load it up, and you'll have that window. Just don't forget to save it to your cloud so that you'll know where it is. Now, Val was asking about the pre-configured daily list. Let me pop into configure here. We're going to go over to symbol list, add existing list, and it'd be right here, Valen. See the daily? When we open up the daily, there are all of those candlestick patterns that you can point to. So I hope that's what you were looking for right there. You're right, Mike. It is very interesting. It's a whole new way to process data. And since we have the ability to launch strategies that we fabricate in paper mode now, then we have a whole new avenue in which to learn and perceive and put different spins on data sets. Because the backtest is one thing, but until you see how something performs in a market condition, I mean, that's a whole different ball of wax there. It's very exciting moving forward. It asks for symbol list, which may be empty. Well, Valen, if you click on hammer, all right, then it's going to show you all the daily hammer candles, right? There's no way for you to go in there and see. That's one of the drawbacks about these pre-configured lists. You can't see what's in them, but they're not empty. All right, David's asking, is there an instruction manual to configure Brokerage Plus to trade Holly AI trades? There are more than likely there is a video on the topic on our YouTube channel.
I'm dropping some video links for him right now.
Perfect. But while Steve's doing that, once you pull up Brokerage Plus here, all right, and this is all aftermarket adjustments or whatever, if you go to the Holly AI tab, like so, then basically here is where you can highlight all the strategies and simply enable them by right-clicking and enabling the strategies. You can also right-click on the strategies to edit the long and short trading instructions from within. So just get in there and play around with it. You'll get used to it pretty quickly here. And man, we're already up against the top of the hour here with a couple of minutes left. So no problem. Thanks for popping in there, Mike. Thank you, David. So Scott, I guess it's about time for the walkout. If you're ready, we're ready for you.
Yeah, great. I hope everyone's in. And if you're not in it, the 20th, but in order to maximize, you want to sign up early and take good advantage of it because it only runs until the 22nd. It's a great value. If you're not in the test drive yet and you're interested in doing it, it's just under $9 for the whole time, and that's all inclusive, including the paper trading, the back testing. You can paper trade auto. You can auto trade with paper trading. Try that out with the AI. It's full featured. Follow the AI, do all kinds of back testing to your strategies. Try stuff out. So go to trade-ideas.com/test drive if you're not already in it and sign up. We've got a great series of ebooks. There's 3 books, each has 2 chapters. If you don't have them yet, just grab them. They're free, trade-ideas.com/setup. Each book presents 2 types of concepts and includes cloud links that you can add to your own Trade Ideas layouts. And both Jamie and Steve contributed chapters to it. So, if you enjoyed their presentation today, you should definitely check the books out. As a podcast, we had a new one up last Friday. We release most Fridays. So if you subscribe to Trade Ideas Podcast, you can get the next one and check out the archives. Just search for Trade Ideas Podcast in whatever app you use to listen to podcasts in and add us. As a code, good this month for 15% off the first month or year of any Trade Ideas subscription, Brokerage Plus license, or an upgrade from standard to premium. If you're a standard subscriber and you're not in the test drive, you should just sign up for it and check it out. See if those are features that you want. Paper Trade will let you get a subscription upgrade for 15% off. It's good this month. If you have any questions, email us, info@trade-ideas.com. Steve is Today Trader on Twitter, Jamie's QuantBot. Our Facebook handle is Trade Ideas Pro. You can follow that and share stuff with your buddies. Any questions, email us, info@trade-ideas.com. It goes into our help desk software for the best support. Thanks, everyone. We'll get this recording up later on tonight or tomorrow. And you get an email reminder tomorrow about where on the playlist it's located on our YouTube channel, so you can find it. Thank you, Jamie. Thank you, Steve. Thank you, attendees. Have a good one.
Thanks, everybody. We'll see you tomorrow. Bye-bye.
I'll see you tomorrow.